Hello and welcome. It is Wednesday, the 28th the year. I was going to say the 20th day. It's not even close. It's the third day of June. And my name is Derek. This is the Money Charts channel. Always the bets and trades that you do, always within your own risk and your own reward. For myself, risk reward management is job number one. As I see silver, and really the physical silver, it's a real asset that's found or itemized amongst the periodic table of elements. And it's something that I realize 5 years, 10 years, 50 years down the line, the probability odds for it to be valuable for many humans and industries and companies and such and investors is probably going to remain very high. How fiat currencies are going to do in that time, I'm not too optimistic for it on the good side. All right, throwing that part aside, we got the quarterly 3-month chart in for silver, which represents the lows from here. About $1.25 at 1972. And then it doesn't say 50 on here. And I think it got up to over 52, but I'm going to be using 50 as a key level, which means that in 2011, a retest of the previous high, a higher low from this low in here. And so far, twice hit low and around the 13, but we'll even say 12 and change because we'll be getting that number in a bit. And now it's a bit. So let's talk about Fibonacci. High to the low to the exponent of the Fibonacci multiply the low. I'm going to use my calculator, and I have this rounded in decimal, so I just put 5,000, which would represent 50, and or 5,000 cents and 125 cents. And key numbers come in at, we have $299, which is about $3, $5, 12, and 21 on such. So then, how did the $5 level do? $5.12. Was it any type of noticeable area of key support in this general area? Well, I'll let you decide that. And then we have the next one in here at 12.22. So let's put a line up around that area, which was an area, it congested towards this, supported it here, but we most certainly, I guess you can say we had our first level of support, at least on this chart, because there, but to go down to a low of what was 1164, of course the first time it was hit since that key point. Now above that line, we have that of $20.94, which represents 76.4% from this. So if you look at the direction of that exact move, logarithmically speaking, that's the levels that we'd be getting to. So just put in a quick line at that point. So as it goes, we can see that these levels, it's been the range since it broke down on this red candle here and has stayed within it now for over 1/2 decade, about 7 years. It resisted it in here, came back, not quite to the support, but it did in this last month on the COVID lows. On the daily chart, it's a wild move. It's literally gotten all back to this key level of significant resistance. If it comes back to any key areas of a higher low where it came from, it would be about the mid 15 up to 16, as well as on a shorter run or less of a, maybe more intermediate or more short term, I guess more short term, about 17 2/3. And this general area in here is that resistance in which it encountered back in here in February of this year, encountered at the start of the year in January. It grows up to that area last September. And we even had general resistance here back in 2017 in September, April. And it came up to resistance at this 20 handle. And 2076 is at 2094. Let's just raise it up a little bit. As if it makes much of a difference. And you can see it all hits that point. It's not been able to retest it, but it's retested that layer below where we are now for quite some time. It never did quite make it. It had and it was overextended at the time when it had this break above, we'll say 19 and change. It corrected fine for a bit anyway. failed breakout in the January, as I mentioned, that high, and then of course the the Rudy Gobert lows come into play, but the rebound has been quick. 18 as a congested corrected within it, yeah, a bit. For after this April 6th rally, a few days we're hung in there with the 18 average of lows, but ever since the week of May the 4th, 4 consecutive green candles up, and this week's more of a pause week more than anything. So I suppose if we're looking for key levels moving forward, I'm just going to keep using Fibonacci, and the numbers get really easy. The next one is retest of the previous high of $20.95. We'll say 21 even. But how about after that? Does this 27 make sense? Well, maybe. I'm going to use exact same Fibonacci, except I have to use larger numbers like the 80% and such. So what I have created is a quick little spreadsheet. And what we have is the $50 high and the $1.25 low, a 40x move that it had. So that divided by that is 40. So 40 to the exponent of this, multiply the low by 25 equals this. Now the reason I got these two numbers in, how I calculate this, I put 0.618 here, and then previous number, multiply 0.618, which is equal to rounded 38.2%. There's your 23.6. 14.69%, and then the 5.57%. And then this is 1 subtract the number. So therefore, after the $20.93 mark brings us $29.19, which means in here would be this general area, of course, of support. Of course, it pierces below in this, and the support was 26. And then after the 29 handle, we're looking at 35.86, 40.71, and from that point there, these would really get to more short-term levels when you get to it. And after the 40, we're looking pretty much at previous high. Although if I want to do another one, we can just copy and paste this, and we get $44 as the next key levels. If I just for whatever, these numbers will get so microscopically like pennies from each other when we get later on. You can see at this stage they mean nothing. But these numbers to me here mean a decent amount. And while we're at it, let's just take a look at some short-term Fibonacci, and I think we'll use these lows in here of about 1167 and the highs of 1892. And the lows are 1164 and 1895 as I've looked at the screen. So put that in and then go through some of the key numbers. And I mean, all of these are like, oh, they're the same in here. But on the way down, we maybe can see here, let's look at starting with, just for something to do, let's take a look at 18, 14, and 17 2/3. And right now, I guess 1814 is where we're at now. So this will happen to hit at 1811, small pierce extra. So yeah, short term, your levels, but going below would be 1765, 1689, 1574, and then 1403. And that will conclude today's silver video, and thank you for tuning in. Bye-bye.